Boom. What's going on, guys? Welcome into your energy news beat here on this gorgeous Monday, February 1st, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com. Stuart Turley, how you doing today?
It's a beautiful day in the neighborhood, and we've got a stacked, racked, packed show.
Yeah, and you can check out all that in a bag of chips on the show to my left here. But first, guys, just continue to subscribe to the world's greatest website, energynewsbeat.com. Hit that notifications button when you go. It's the best way to legit have a stream of consciousness of energy news. Also, if you're watching this show, smash that like button. Or a 16-year-old YouTuber making millions would say, but I'll refrain from screaming that again.
Thank you.
If you followed the show last week, we talked a lot about GameStop. We talked a lot about AMC. Unfortunately, we still get to talk about them today in the equities markets. I'll run over top-line numbers today. It was green all around the board today, Stu. Money was made on Wall Street for everybody. SPY was up 1.6 percentage point. Nasdaq 2.5 percentage points on the upside. Dow Jones 1.14% on the upside off a couple of things. One, earnings started rolling out this week that are being buoyed. But when we look on the retail trading side, GameStop, they fell as much as 34%. Trading was actually halted briefly on the downside. It's since recovered, down only about 12 percentage points. As I mentioned, Goldman Sachs came out this morning and said the short squeeze that last week triggered a buying spree that was the most extreme in 25 years. Mark Haefele, Chief Investment Officer over at UBS Global Wealth Management, he wrote in a note this morning, the return of volatility over the past week has been driven by market positioning rather than worries over growth. So that's the interesting part. People have shifted from evaluations. I read today that the old way of looking at fundamentals, the old curmudgeon way of just sitting down there and judging someone based upon discounted cash flow, those days are over, Stu. You know, whatever you learned back in MBA school in the 1980s, throw that book out the window. It's all about future growth. Give you guys an idea, popular online brokerage, Robinhood, who we spent a lot of time dogging on last week. Turns out it was all just liquidity issues. They raised another $2.4 billion from investors, which, to be honest with you, it shows me that the people who are invested in Robinhood don't see this as a huge risk moving forward. They would not have invested the capital required to go ahead and get them to be able to meet their clearinghouse deposit requirements, which if you saw our good friend, as Stu says, Elon Musk came on with CEO Vlad, I forget what his last name is. He looks like a cross between who's the guy from WeWork? Adam Newman. It's the WeWork guy and the guy the Wall Street Bets guy. That's exactly who the two guys who Vlad looks. I saw that on Twitter, just absolutely cracked me up. But yeah, the fact that they were able to raise this money means that the investors like it. Probably means they'll still IPO in a little bit. People in Reddit have actually moved over to silver now. Gotta love that. I'm a futures trader myself. Futures contract for silver were up as much as 11%.
When are they going to oil? Let's go.
Go to oil stocks. Can we pump some oil stocks up? Let's send something to the moon here. Let's get Ring Energy for no reason to the moon just because we like them. But you can't go out, all those commercials for during the football games that are targeted at our grandpas about, buy gold, it's the safest investment. Well, you can't actually buy physical gold and silver now. Trust me, I tried to buy a couple troy ounces over the weekend. You had to wait a little bit, so it'll be very interesting to see what happens for silver. Enough about the overall markets. Let's move on to crude oil. Great day, guys. 53.62 currently trading over 2.7 percentage points on the upside. As the markets continue to do well and as we continue to sort of evade some of these coronavirus stuff, it also turns out we're going to at least see $1,000 checks to individuals. As stimulus continues to roll out, 10 senators met today with President Joe Biden. We're going to continue to see oil prices propped up because as demand goes, so will prices of oil back into the curve. 2.46 percentage points, currently trading 51.25. Natural gas, 9.7% on the upside, $2.81. Weather models turn cold. Here's the note from Wood Mackenzie analyst Dan Spangler showed that colder temperatures are traveling further east, and they will show about 5 to 10 days. Remember, it's that 5 to 10 day weather requirement that really causes this. Good cold weather for natural gas. Back into the curve only spikes 4.3 percentage points, currently trading $2.97. XLP was our E&P securities contract. It was up 2.29 percentage points as we roll into earnings this week. OIH was oilfield services over 1.4 percentage points. For all my Dogecoin friends, they're trading at 3.75 cents right now. As I mentioned, top line silver contract 29.27, spot silver futures 29.10. So if you're into any of those, any of those Reddit stocks, we'll keep you up to date on. Downside, couple things. Barnwell, they're down 5.5 percentage points. Tensco Gas down 7.85 percentage points, and New Concept Energy. Targets of Reddit last week. Didn't have a good day, down over 25 percentage points, currently trading $8.25 percentage points. Let's look at the upside, though. Good numbers. Alliance Resource Partners, they're up 10 percentage points. Grand Terra Energy, they're up 12.95 percentage points. Centennial Resource Development, $2.72, currently trading at. They're up 16 percentage points. And Mexico Energy Corp, all the way up 21.47 percentage points. So, International News Desk, baby, what do we got?
Oh, it's been just a zoo over the weekend, Michael. It has been crazy. First up, out of the desk, you tossed this one to me this morning on our desk, Oxy. I thought this was really cool. U.S. Occidental supplies first cargo of carbon neutral to India's Reliance highlights. I thought this was really pretty cool. First, I'm sitting there going, how did they get oil from Oxy?
Well, what's carbon? My first question when you read the articles, what in the heck is carbon neutral oil?
Well, it's something that it used to be a dinosaur, and now it is called carbon credits. Basically, they are buying carbon credits, the development of a net zero oil or climate differentiated crude oil, which will be produced in the capture sequences of atmospheric, I can't even say that, CO2. Okay, basically it's a marketing scheme. And I like it from the standpoint that it's going to hold a lot of people happy. Hats off to Oxy, and I think it's great, but I'm going to start investing in carbon capture credits. Elon Musk is my hero. He's already broken the code on that one. Okay, next one.
But my whole thing is, did I just
do what?
I could spend all day talking about this specific article. All I'll say is this: did they think we weren't going to read the actual article, or do most people really just read the headline? Because you read the article and all I think was, oh, okay, so this isn't carbon neutral. All they did was buy carbon credits and produce oil. So it just the fact.
Hang on. Here we go, Michael. I thought it was really good in there, and we take a look at the statement. We have to set a target to reach net zero emissions associated with our operations before 2040, says CEO Vicky Holla said in December.
Great job.
I think great. But the bottom line,
does this put them on the path? No.
But monetarily, it's putting everybody on buying those. So Wall Street's and Reddit needs to get in line to start buying carbon credit.
Yeah, we're going to open up a Sandstone brokerage. All you can do is buy and sell carbon credits through us.
Okay, that'll be on the futures next. Next one coming around the corner is BP.
This was a lot of money.
Oh, absolutely. You know, they were trying to get rid of, I believe, 25% of their investment divestiture. This one totally over the next few years. BP sells Oman stake to Thai firm for $25 billion divestment drive. It is a fracking concession. You and I were kind of laughing about that. Fracking is actually going on in Oman. Now, we thought it was only in the Permian, but go figure that out.
I just figured in Saudi Arabia, all you do to drill a well is just dig a hole.
No. Anyway, the other one is we do a lot with energy and DI communities. We'll go into that later someday, but there ain't no communities around this
there
sucker.
Ain't no communities.
Okay. And then Block 1 of BP's biggest asset in Oman has a daily combined production of 1.5 billion cubic feet of gas and more than 65,000 barrels of condensate. Anyway, I thought that was pretty interesting. Okay, here we have on Sunday. This was an interesting story that I was wrestling with on all these other ones. OPEC Plus sees almost a full compliance with January oil supply cuts. This is only one of about 50 articles that are going on right now. And I've been saying, Michael, for a long time, nobody knows what is going on with OPEC Plus, and the group that is in here that is absolutely uncontrollable for world volumes. Even having fun arguments with people on Twitter, and I'm no wonder I've never gotten into Twitter before. They are held right now to 7.2 million barrels per day of the OPEC Plus alliance. So of the OPEC Plus alliance, Iran is third behind Russia and Saudi Arabia. Now, here we go. This comes up into the one that we did this morning. You remember George Friedman when you and I interviewed him last year?
You interviewed him. I was just behind. I was behind the curtain watching the magic happen.
Oh, it was a fun interview. I really, really liked my time. He did the Storm Before the Calm. Great book. He runs over there, Geopolitical Futures. Great organization. Go over there, sign up, get their information. Anyway, this article is about the nuclear Iran deal and a bomb that, okay, real quick. Thank you to all of our readers and all of our subscribers and everybody that is feeding us back information on Twitter and all of our fans. They are doing great. Thank you all very much. That being said, I've been getting some great feedback on this whole situation. The bottom line is OPEC and OPEC Plus do not know how much the members are producing and supplying to the insatiable demand from China. What Israel and the rest of the world do for the next few weeks will determine a lot, depending on the new administration. And that comes back, if somebody missed our show on Friday, that was because the Biden administration just put the same negotiator that they had on with the Obama Biden, and it cost us $1.6 billion in cash to get that one. And they didn't follow that one. Now, this one, 2 seconds, Michael. Okay. See this guy?
Yeah.
Okay. I saw this one yesterday. Funny article. It says, his quote in the article on this one is very important. Electricity will be the backbone of energy systems. How would you like to be known for that quote?
Knowledge is the backbone of education. I can do it too. We
Back
can
to
all
you,
do
Michael.
it too. The internet is the backbone of the computer. Electricity is the backbone of the power grid. Good one, dude. Good one. Honorary degree from Harvard.
That's almost like Oxy saying it's carbon. Never mind.
It's worse.
Okay.
It's worse. It's worse because it's worse because it's obvious. At least Oxy tried to be deceptive.
And they paid for it.
Yeah. Hey. Anything else in the international news desk?
No, I'm wiped out.
Yeah, I'm wiped out. Again, all those stories courtesy of the world's greatest website, energynewsbeat.com. I've got 3 stories here. Earnings start in earnest, pun intended, tomorrow. We'll have all of that coverage here rolling up. But first, over the weekend, we had 2 M&A stories that happened. First, Surge Energy goes ahead and buys Granada Energy Partners 2 LLC. Surge Energy Holding is a subsidiary. Let me get the name of the company right. Shandong Ixchano Energy Corporation Limited, a publicly traded company on the Shanghai Stock Exchange. They've agreed to purchase over 9,000 barrels of oil equivalent today, about 75% oil, 18,000 net leasehold acres, and about 120, quote, high-quality economic future drilling locations in none other than Howard County, Texas. Last company I'd expect to be down in the Permian, Surge Energy. They're an independent oil and gas operations company focused on exploration, development, and production and acquisition of oil and gas reserves in Midland Basin of West Texas. As I mentioned, they are a Chinese company. They're very interesting. They're not Nasdaq traded. They're actually traded on the Shanghai Stock Exchange. And Surge is specifically a private company. As I mentioned, they're a subsidiary of someone who trades on the Shanghai Stock Exchange. But it's going to be interesting to see, President Bush, or not Bush, President Trump. I was watching in my disclosure. There's these HBO documentaries. They're called Race for the White House, and they go back and replay different political races. I watched Lincoln and Stephen Douglas last night. I just watched Dukakis and George older Bush this morning. So this is why I was thinking about him.
Oh,
but President
Lincoln.
Trump wasn't terribly into China. I think we can affirmatively say that. It's going to be interesting how Joe Biden and regulators go ahead and play China. Obviously, this holding company or search entity does not believe that there's going to be any regulations on them being able to operate, so they go ahead and move forward. Total value of that transaction, $420 million. Nice. That I thought was a big number until we all of a sudden overheard Exxon Chevron CEOs discuss merger in early 2020. Holy smokes, dude. The chief executive over at ExxonMobil and Chevron spoke about combining the two oil giants around the time of the coronavirus pandemic, according to people familiar with the talks. Chevron chief executive Michael Worth and Exxon CEO Darren Woods discussed a merger following the outbreak of the new coronavirus pandemic, which decimated oil and gas demand and put an enormous financial strain on both companies. Give you guys an idea, the total combined market cap of the company could top $350 billion, still less than twice the value of Tesla, with over 10 times the earnings. Just give you an idea how things are traded nowadays. ExxonMobil current market cap $190 billion, Chevron's 164. Together they would likely form, I don't know why they say likely, they would be the second largest oil company by market capitalization. They'd produce about 7 million barrels of oil today, and second only to Saudi Aramco. Probably just go ahead and rename themselves Standard Oil. John Rockefeller rolling over in his grave. It only took 100 years to get us back to the old school Standard Oil. Stu, Exxon Chevron merger, what do you think?
DRW said it best, one oil company to rule them all, so to speak. I think that about 50,000 employees would think it's a bad idea. From a other perspective, I think it's not a good idea. From a business perspective, from a shareholder perspective, it might be a good idea. So
I'm of the opinion that I like. So if I had to compare Exxon to Chevron, even though Exxon's worth a little more, I like Chevron's assets better. I think they're a little more set up. So it's funny, you're talking about Exxon acquiring Chevron. I want Chevron stuff. Chevron, and I saw I know he's, DRW, he's big on Chevron should buy EOG. One of these two companies should go out and buy EOG versus pairing up. I know energy research analyst or independent analyst Paul Sankey came out in October and actually mentioned this. I saw this on CNBC. I don't know.
I think you are dead on right with that, Michael. I think going Chevron and EOG would be much.
Yeah, I can't take credit for that. That's definitely not my. I did not come up with that. I'm definitely of the belief that I don't think this is necessarily the merger that they should do. I think Exxon and Chevron should continue to go buy other companies. I think buying, Exxon going and buy Diamondback, Chevron going and get EOG, somebody swooping in and maybe Pioneer gets taken out. Maybe Chevron just says we're going to take out Pioneer and really control the Permian. Maybe one of them takes out Occidental and says we're going to control the Permian. I don't know. But if we are going to get down to one company to rule them all, it's going to come down to a handful. It's either Exxon, Chevron, maybe ConocoPhillips, but I don't even know.
Don't know. I think Aramco is going to own them all eventually.
Yeah, Tesla's going to own them all because they're just going to be selling credits to them all for carbon-free oil and gas. Holy smokes. All right, let's shift over here. This is kind of an international story because it has to do with BP and Shell. It has everything to do with trading something I love. So to give you guys an idea, if you are an oil and gas trader, the gold standard for jobs in America, BP trading unit, Shell trading unit. Give you guys an idea. Shell is the world's largest energy trader. It's what actually is called marketing. So if you hear, I work in oil and gas marketing, guys, don't worry. They're not selling you digital marketing ads. They're selling you physical oil, baby. 13 million barrels of oil are traded through their accounts. That's about 13% of global oil demand before the pandemic. It's also the top trader over there at Shell of liquefied natural gas. They buy and sell powered biofuels, chemical carbon credits, and now aims to use its pole positioned to snare a large chunk of the fastest growing low carbon power market. So what's happening here? Shell and BP announced that they're going to take their trading experts and move over and start trading power and electricity. This is crazy, Stu, because unlike and this is not crazy because oil and gas is traded on a 24/7 basis. The thing about power, you always need power, whether it's Christmas, whether it's Thanksgiving, whether it's midnight when it gets a little cold, you got to go turn up the heat a little bit. You need power. And so these guys trade 24/7. I almost actually became a power trader. And I said, yeah, no, I'm not working night shift on Christmas just to pump electricity to LA where no one will even really like me. Shell on February 11th is presenting a strategy that will focus on becoming an intermediary between clean power producers and its customers rather than investing the billions itself in the renewable projects, which is interesting and I think a good leverage of there. Don't go out and try to start a whole new market. Leverage what you're good at, trading, in order to become that counterparty. Stu, you were going to say something.
No, I just said nobody likes you, Michael.
Yeah, nobody does like me, so thanks for calling.
I'm the old guy that hung out with Lincoln, so, hey.
I am. It's a good show. I'd highly recommend it if you're interested in a little history. So, but BP has also announced they're going to do the same. Shell also announced in October it's going to be increasing its spend on low-carbon energy to 25% of its overall capital expenditures by 2025. So, hey, someone's trading carbon credits, and it's Shell. Good for them.
Yep.
Anything else we missed today?
Nah, it's been a fun day.
It has. With that, guys, we're going to go and let you get out of here, get back to work. For Stuart Turley, I'm Michael Tanner. Thank you, guys. Visit Energy Newsbeat. We'll see you on the show tomorrow.
Thanks to our survivors.